Do you think there's a point that's going to come where guys like you and me, we can't get investment silver anymore just because Apple and Samsung are buying it all?
Well, it becomes a bidding war. All it does is drive up the price. The refiners that are selling those metals either to Apple or IBM or to us, the consumers, frankly, they don't care who they sell it to. They'll sell it to the highest bidder.
Hey, welcome back to Wall Street Silver. Today we have a great guest, Mark Yaxley. Mark is the Managing Director of Strategic Wealth Preservation in the Cayman Islands. That must be nice, working in the Caymans. Thanks for joining us, Mark.
I'm really excited to be here with you guys today. Thanks for having me.
So, Mark, the price of silver, it has not gone up through 30. We kind of made a nice run toward it, but we've been selling off since. Why do you think the price is not going?
Yeah, it's a great question, Lee. I think it's completely normal and somewhat expected. Last year, silver had a heck of a run. Both gold and silver had great runs. We had been waiting for those breakouts for quite a long time. Those of us who have been in precious metals, for 10 plus years, kind of saw the metals trading in a pretty stagnant bandwidth between 2012, 2013, all the way up to 2018, 19, really before we started to see the early signs of a bull market. And silver had a great run last year. It ran at its peak. It was up over 80% year over year. So I think it's somewhat realistic that the metal has cooled off a little bit. It's normal that we're seeing a little bit of a pullback. Some people taking profits on that incredible run. I can tell you for a fact that there is still a lot of demand and a lot of support for the silver price. So that's the good news. Even though it's cooled off a little bit, I think there's still a lot to be positive about right now.
I was going to say the price has come down so much, but the premiums don't really seem to be contracting. I mean, there's still a huge spread.
And that's exactly what I want to get at, Lee, is that the price is one part of the equation. And there's a lot of factors that can drive that price south. And we can get into that. That's one thing that can possibly be manipulated, but you cannot manipulate premiums. Premiums are, the truest indicator of what the demand for physical precious metals looks like, because there's so many independent dealers and market makers that are trying to sell as much product as possible. They're going to compete with each other on premium. So if the premiums are high across the board, what that tells us is that the underlying support for the asset for silver is still there. And so that's good news. I know it's, investors are like, man, I don't want to pay so much for my silver eagles, and I think I'm paying too much in premium. But the good news is that means that there's underlying support for the asset, and that should give us encouragement, because it means the downside is very limited, and the upside, well, we all know is quite quite positive. So,
well, that brings up the point. All the dealers, the online dealers, even local dealers, they're not getting the spot price, and I think a lot of people get upset thinking, Why can't I get my 10-ounce bar at spot? It's like, what is the typical dealer? What price are they buying their product at?
Yeah, I mean, we're in the business. We have direct lines to refineries and to wholesalers, and I can't get my own 10-ounce silver bars at spot either. So what people need to understand is what comprises a premium. That's a really important, basic item that investors need to understand. The spot price is the basis for the conversation. And then the premium above the spot price comprises of the refiner that's producing the bars and coins, the logistics company that is picking up those large lots of silver and gold from the refinery, moving them to a wholesaler. The wholesaler then marks it up a little bit, ships that on to the retailer, and then on to the retail client. So in that entire supply chain, that's where everyone is making their living. And that supply chain basically is reflected in the premium. So, the idea of getting silver at spot is one that in a market like this is virtually impossible. And so people have to be a little bit more realistic and understand that there's a lot of members of the industry that are making a living within that premium.
Well, it used to be that premiums were closer to $2 over spot. And now it seems like they're about $4. Is that just a function of there's just the demand is that much higher and everyone's inventories are just really tight?
Yeah, there's kind of two parts to that, Jim. The first part is on the manufacturing side, on the actual production. So a lot of people, I hear quite often, people are like, there's no silver in the market. There's a shortage of silver worldwide. That's not quite true. There's actually a very steady supply of silver coming out of the mines. Last year, supply was down only 3%. And overall demand for silver, believe it or not, was down last year, globally 10%, mostly because the industrial uses for silver had declined during the COVID kind of lockdown period. So the supply side is very, very steady. The culprit in all of this is the refiners and the mints. These are large organizations, government owned in a lot of cases, basically unionized organizations. They're very slow to ramp up production when there's a spike in the market. They're very used to producing the same amount of rounds and bars and ounces on a weekly and on a monthly basis. When there's a spike in activity in the market, it takes them sometimes 3 to 6 months to adjust their production schedules, to hire new staff, to bring in new equipment from China and from Germany to produce the bars and coins that we all enjoy stacking. And so that creates a lull right away. And that's a squeeze in the market that basically starts driving up premium, because there's a demand for these products to actually be delivered to the consumer. And then, of course, I hate to say it, but it's absolutely true. The wholesalers, the distributors, and the retail dealers will, of course, take a wider spread on those products, because they know that there's not just one investor lining up for them. There's multiple investors lining up for those products. So, of course, they're going to make a nicer margin. And when those premiums are $2, I'll tell you, the margins for dealers and wholesalers are razor thin. They're really competing on price, and it's in the favor of the buyer. Right now, it's a seller's market, definitely.
When you say that demand was down, you're only referring to the industrial demand side. Of course, industrial demand was way skyrocketing last year. Like almost, I've heard up 100% for a lot of the people, or more.
It was up about 300% at the peak of the peak of the COVID interruptions. I'd say that was like April through June, July of last year. We've seen that kind of steadily decline. It's not normal. Demand is still about 100%, 50% higher than pre-COVID times. But absolutely, there was a pretty massive spike on the retail side, but on the industrial side, in fact, it did decline significantly because people weren't producing anything.
When you say that, where retail demand spiked 300% April to July, as you said, that's exactly when we broke out above 18 and 20 and took off for 28 last year. So it was really retail that the blue silver through resistance. Possibly it'll take retail to do it again for this thing to get going.
It always takes retail to come to the party. That's one thing I write about quite often. I speak about quite often is it takes Main Street to push to new record highs. We're not going to, industrial demand is not going to fluctuate very much every year. The supply coming out of the ground is going to be relatively steady. It's investors like us that are going to push the envelope and push the price to do new record highs, or at least temporary highs.
Can you explain why the premiums on the American Eagles are just so much higher than every other bullion out there?
That's a good question, Lee. I can give it a shot. I've been selling American Eagles for like 16 years. So we've moved a lot of them, and the premiums have fluctuated anywhere from, at a very low, I've sold American Eagles probably for about $3.50 over spot. A few months ago, I remember putting out quotes to clients with a little asterisk beside it, like, don't buy this, basically. And the premium was like $8 to $10. And I'm serious. I don't like selling silver with a premium that high. It feels wrong. And I think that people need to think twice and look for better deals. The fact is the US Mint is the most expensive mint in terms of their production, their fixed production costs, and their price to their distributors out of the gate. So right away, they're starting with a higher premium than everyone else, into like Royal Canadian Mint, Perth Mint, Austrian Mint, all the major players. Then you've got the fact that the American Silver Eagle is the most popular silver bullion coin in the world. So you've got a lot of demand. Americans love their Eagles, and even overseas and in Europe, they sell very, very well. The US Mint was shut down. They shut down a few facilities during the COVID times. And again, it's a government organization. They do not respond extremely well to spikes in the market. So all these factors will drive up the price.
Which of the other sovereign mints do you think are the best value right now? I'm talking like, I consider the big ones, the Austrian Philharmonic, the British Britannia, the Canadian Maple Leaf. the South African Krugerrand, the kangaroo from Australia. Of those like 6 big ones, which do you think is the best value right now?
Yeah, I don't want to sound biased. I am Canadian. I was, born in Montreal, and I think the Royal Canadian Mint offers very good value. It really is the number 2 coin worldwide in terms of demand. So the liquidity and the recognition of that product globally, from the Cayman Islands all the way to New Zealand, is very, very good. Almost equal to the US Mint, if not on par. And the premiums are significantly lower, you've noticed, than the US Mint generally. I tend to be a big proponent when clients are talking to us about sovereign mint product. If they're fixated on buying product that's produced by sovereign mint, I tend to recommend the Royal Canadian Mint, but I'm certainly not opposed. I actually brought along one of my favorite pieces today, which is a kilo koala coin from the Perth Mint of Australia.
Holy cow. That's a big coin.
It's a nice thick one.
Holy cow.
But they make beautiful stuff. So I don't want to discourage people from looking at other mints. Overall investment purposes, I would say Royal Canadian Mint is probably the best value on the market.
You got any other toys there on your desk you want to show us?
Actually, you know what? It's too bad I'm not in the vault today. I didn't have the chance to get in there and set up and film. So that's the only thing I brought with me, but I figured I'd flash a little silver for you guys.
Yeah. And that gives you some street cred with our audience. So thank you for doing that.
No problem.
Mark, do you have any strategy to share with our viewers in terms of what they should acquire, how they should acquire it? Should you start with like junk silver, move on to bars, buy sovereign coins?
Yeah, it's a good question. And there's no one answer. There's no magic bullet when it comes to precious metals. There's a lot of options. Jim, you pointed out earlier, there's 5 or 6 sovereign mints. You throw in the recognized refiners, you've got, another half dozen very high quality refiners that we can all access. So, 2 golden rules that I would kind of stick by when I talk to clients about it is, number 1, don't get pigeonholed into one metal. Try to diversify amongst gold, silver, and the platinum group metals. If you're only investing in one metal, you may benefit in the short term from that particular metal doing better than the others. But in the long term, having a diversified precious metals portfolio is actually a more logical, kind of safe approach to owning precious metals. So don't get fixated just on one thing. Try to spread the love a little bit and protect yourself with gold, silver, and platinum if you can get some. But my other piece of advice, probably more to the point, Lee, is that people should be looking at products that have the lowest total spreads possible. A lot of people will fixate on the premium that they pay for the product up front, and they forget to think about the part where they're going to sell it one day. And hopefully you are going to sell it at a profit one day. Precious metal investors, we're all very loyal to precious metals. I have stuff that I've had for 16 years, but there are also parts of my portfolio that I do liquidate, I do take profit. And when I do that, I'm looking at total spread. What did I pay for premium? And what is the discount that I'm getting when I sell it? And I want that number to be as tight as possible. And that's how I'll make a few more ounces in the deal. I'll have a little bit more money to buy a few more ounces to roll that over.
How do you determine that price, though, the sale price, and what the spread is?
Well, most dealers will display their buyback prices on their websites, or when you give them a phone call, they'll be able to give you a live bid price when you're selling. So you can literally look at their sale price for the premium, and then you can look at the buyback price and you can determine what that total spread is. And one of the things that I've often told investors as well is that the guys who have the best selling prices up front, the lowest premiums, don't always have the best buyback prices. They drag you into the net with a really good deal on the buy, and you're loyal to that dealer. You have a relationship with them. You feel like you're buddies. But when it comes time to sell, they're like 1 or 2% worse than another dealer that you could go find. So you can actually play dealers off each other. And again, it takes a little bit of time and a little bit of math, but it's really the best way if you're looking to buy as many ounces as possible with your money, which is ultimately the secret.
What is, I've gotten a lot of my sovereign coins out of my system. I've got my monster box for my American Eagles. I got a box for the Harmonics. I got a box for the Britannias. Almost a box of the Maple Leafs, not quite. So I'm looking to go more generic now going forward. I've got the sovereign thing out of my system. I got enough of those. Should I just be looking at 10-ounce bars, or should I step it up to 100-ounce bars? Just the raw silver maximum. What's the best value for your dollar just for raw ounces right now? What piece of silver? What size for someone?
Yeah, what you're describing, Jim, is actually very typical of a lot of investors, is that they will start with sovereign product and they build a nice base of kind of higher premium, higher liquidity, higher resale value product in a small denomination that's liquid everywhere in the world. Like you can sell an Eagle or a Maple anywhere, anytime, no issues, right? So now you're moving into the kind of that phase two of your portfolio where you're like, I want the lowest premium possible to really use it as an investment, to either make a return or save yourself some money or get as many ounces as possible. So my advice to people, again, going back to the argument of lowest possible total spread, which is really what you're after, is you should try to ramp up the format or the quantity, the number of ounces in that bar as much as you can afford to do it. So for example, if you had enough money to buy 100 ounces, general rule is instead of buying 100 1-ounce silver bars or 100 1-ounce rounds, go and get yourself a 100-ounce silver bar, because you will probably save some spread along the way. As long, again, do your math, but chances are you're going to save some spread that way. So if you're looking at it strictly from an investment point of view, then that's probably the best way to go.
Now, dude, who has the best prices on those? Is it on the online dealers, your local coin store, or do local coin stores even have 100-ounce bars typically? I haven't even checked. Never tried.
Well, it depends where you live. If you live in a rural area, your local coin shop might struggle to have more than one or two of those lying around. Mm-hmm. They can probably order from their suppliers, but your local coin shop, I've owned one, I've operated one, and I tell people, if you're a new buyer in this market, go to your local coin shop, talk to the guy. He's going to take the time and explain everything, and you can look at everything. But as you kind of ramp up your stack and you're trying to save money, you might as well go online, because I think that's where you're going to generally find the best deals, unless you live in a major city where you have access to a fairly large dealership that has a retail shop.
Mm-hmm. I have a question about inflation here. We've been seeing price inflation in all kinds of things, gasoline, food, whatever it may be. And traditionally, precious metals have been sold as a hedge against inflation. They don't seem to be inflating in price.
Yeah, that's a good point. Is silver no longer a monetary metal? Is it just a? I mean, we all like to think it is. We say silver is real money, but is it no longer a monetary metal? It's just based on industrial demand.
Sadly, guys, I think looking at it objectively, and I know this isn't what people want to hear, but I think the world does not treat silver and gold more so. And in some places, gold still is treated as money. For example, in Vietnam, you can still use gold to put a down payment on your house. But in fewer and fewer circumstances are gold and silver viewed as money and treated as money. But okay, going back to your question, Jim, about inflation. Yes, we're not seeing the immediate price or inflation in the actual price itself, in the spot price. And I think that's the tail end of a very, very strong run that we had last year, where silver was up 80 points. Gold was up about 40 points at its peak. But where you do see inflation is in the premiums, is in the supply chain, because you cannot avoid inflation in the cost to manufacture, the cost to ship. You can't, it's built in there. It's baked into the cake. So you are seeing it, but you're seeing it on the premium side versus the price right now anyways. But longer term, I mean, we're saying inflation, this whole inflation debate, this is like 3 months. That's a fairly short period of time. I'd say let's let it play out for another 2-3 years and see what gold and silver do. In my opinion, we're setting up for another pretty strong push. We just needed to cool off a little bit before we push forward.
I've talked with Keith Neumeyer and interviewed him several times, and we talk about you guys see this?
Mm-hmm. Yep.
And we talk about the supply side. And you also mentioned 784 million ounces came out of the ground last year. And Keith is of the opinion that, we've seen the peak in production, that this number is not going to get back up to the highs, that the best mines have already been depleted. We're going after smaller and smaller deposits that are generally lower grade ore. And we're seeing this gradual decline from the mines, and also seeing a slow, gradual increase in consumption from the industry. So at some point, these two issues collide, where industries consuming 100% of the ounces coming out of the ground. And do you think there's a point that's going to come where guys like you and me, we can't get investment silver anymore just because Apple and Samsung are buying it all?
Well, it becomes a bidding war. All it does is drive up the price. The refiners that are selling those metals either to Apple or IBM or to us, the consumers, frankly, they don't care who they sell it to. They'll sell it to the highest bidder. Mm-hmm. So I think there's a good chance that there will always be investment grade precious metals available. And don't forget, you have the secondary market as well. If the price of silver continues to be driven up, let's say it goes to $100 an ounce, guys who bought it at $10 an ounce, you're going to find a few of them are going to sell some ounces.
Oh yeah.
So that's going to, it's going to keep, it's going to keep product available in the market. It's supply and demand driven. The graph is very telling. And if you look at that graph, it correlates very nicely to the price increase in silver that we've started to see. So this is super positive for silver investors. I know it's been a long time coming for a lot of people. And we all want, like human nature is, we all want results really quickly. I know Lee sent me a question. We talked about hyperdrive. Like everyone is so hyper driven by everything in life these days. But it's like the part that we usually get wrong as investors is the timing. We know fundamentally what is going to happen. And there are very good arguments as to why silver and gold are going to go higher. But we have to be patient, let the markets play out. And I think we're going to get there. But the graph is great. I think it correlates really nicely to what we're seeing.
Let's talk about precious metals as a wealth preservation tool. Everyone has been focused on Bitcoin as kind of like in case something happens in your country. And do you have any stories relating to precious metals along these lines?
I do have a few actually. If you're in for a couple of quick stories. Number one was one of my mentors was born in Romania, and his father was a gold miner actually in a communist country. His father managed to smuggle some small gold nuggets out of the mine and back home, throughout his career. And when things got really, really bad in Romania, this goes back to I think in the 60s or 70s, he sent his son off to Italy to become educated and to escape this communist country. And what he did is he sewed these gold nuggets into his jacket. And my mentor at the time was able to cross the border into Italy and pay for his living and his education with these gold nuggets. He then went on to go to UCLA and became the head trader at one of the largest gold trading desks in the United States. So, this is from his own personal experience. This is a real life thing that happened to someone I knew personally. And the other one that I've heard quite often, and I'm sure you guys have heard as well, is at the end of the Vietnam War, the United States invited a lot of Vietnamese nationals to come live in the United States. Some of them that had worked for the US government during the war. And, some of these people showed up with a lot of cash, Vietnamese cash, which was, unfortunately, they were told when they arrived in the United States, completely worthless. It was actually worth zero. And those who showed up with gold bars, did very well. They went on to open small businesses and, formed communities in California and other coastal cities and did really well. So, two examples of what precious metals can do. Now, I'm not saying that's the primary reason necessarily to own it, but that's one consideration. And it goes to show, one of the attributes of how valuable this stuff really is in real life circumstances.
Mm-hmm. Well, Mark, I want to thank you very much for joining us today and sharing your experience and your knowledge about the precious metals market. I'd love to have you back as the market develops over the next year or so. We need experts like you to come share what's going on underneath the hood for our members, and we really appreciate you sharing.
Yeah, no problem.
Price goes to 50 there, Mark.
Yeah.
Well, look, guys, I'm always willing to come and share my knowledge. It's kind of become a life mission for me to try to educate people on precious metals. And I wanted to say, and I hope you guys will leave this in because I'm very enthusiastic about what you guys are doing. I've been working in this industry for 16 years. I have never seen a concentrated amount of energy being pumped into our otherwise fairly sleepy market by the likes of Wall Street Silver and Silver Squeeze. It's really great that it's bringing so much visibility to precious metals and it's bringing a lot of new investors into the space. And ultimately, I think that's a fantastic thing. So, keep up the good work. And we're also watching you guys and seeing what you guys are up to.
Thank you very much, sir.